Okay, I really have two or three favorite models, but there's BlackBourbon, and we're only going to talk about one right now. It's a stop and reverse model meant for news and bank opens. Now, Forex has multiple different advantages to us, okay? And some of those advantages really have to do with this. Let's start our trade layout with trading advantages. Trading problems and edges. Well, let's say trading edge, and then we'll put problems under a different section. Trading edge. What is my trading edge? I know when, for the most part, when the historical volatility will change. Okay, now I know that because of what we call time slicing of data. Okay, because I can go back and I can say, well, when news comes out, HV expands. Waiting for news, HV contracts. This is a big advantage. Now, the second advantage in Forex is, since I know this same thing in stocks, but it has more session time, because I know when it contracts when banks open, and I know when it contracts when banks close. So it has more session time than stocks. Okay, this allows us to get more trades. Okay, so more. I don't know why it doesn't like more session time than stocks. Okay, period. Now, it also has advantage. We can size small. This allows uber cool, sophisticated money management profiles. Okay, this is an advantage that I can go down to 0.01 a tick. Now there are disadvantages. Sometimes we could talk about that, about getting down to 0.01 a tick can be a problem. We can hedge if we're outside the United States. Okay, so that is also an advantage to us. So let's get this up here. Hedging is an advantage. Shoot, it doesn't like that, where I want to tab over and put in hedging. Hedging helps. Okay, hedging helps. So these are our trading advantages in the model. We know when time expands or contracts. Now, our trading problems in the model, our trading problems are this. Okay, it uses some martingale in the money management system. And martingale applies to everything. So let's be clarified. It uses martingale of lots. Now this is scary because this is limited. It's limited to the amount of money we have in our account. So we have to be really careful with this. Now, this is some of the trading problems that can happen with it. Other ones can be dealing desk problems. So I'm not going to cover lots and lots of problems in depth right now, because that could be a video for a full hour, because underneath this we have dealing desk problems. So if I put this down, this is a trading problem of money management system. This is something we dealt with. It's a trading problem with the money management system that we have elected to use, and we elected to use this because the losses in the row are very, very small. Okay, so the next thing that we have is in our money management system. We also have errors within the broker, and these really are broker errors. We have errors within MetaTrader, MetaTrader. Okay, errors within the INET, and we could do errors within banks and dealing desk. Errors within dealing desk, and we could say also within the software we use within the EAs. Errors within EA. Now, these are big topics. We're going to skip a lot of these because a lot of these have been trapped, and it's very lengthy and in depth. But the reason we brought it up, there are two bourbons. There is BlackBourbon XXX. Okay, BlackBourbon XXX. Now, BlackBourbon XXX is hardened code. It's hardened code. It's ran for a year with no errors. It's just solid as a rock. But it does not have air traps. Now, there's a series of air traps where there's another BlackBourbon, and it doesn't have the XXX on it. This is our new builds of the same system. Okay, it's the same exact system, but it has very sophisticated air traps. It addresses all of these. All of these issues are addressed in it, but it's not hardened code. It's what's called released code. Released code. Okay, now this becomes important. All right, it becomes really important. This helps us prevent problems that could come up, and we could have a whole section on this. But the next part is tradable instruments. What instrument do I want to run this on? Okay, now this becomes really sophisticated how we've done this. I'm going to bring up our spreadsheet, and we're going to look at this. And every once in a while, this needs to be changed. It has not been done dynamically. There's a reason for this. Time slicing of data, the way that I've done it as a programmer, is very kludgy. By kludgy, I mean it's very straightforward, almost like a Russian designed car. Very simple, very straightforward, but very much a hammer pounding on something. It's not very eloquent, and it's not speedy. Okay, and so it makes the system run a little bit slower. So what we do is inside this, we have set up something you have to update by hand every once in a while. It's kind of a drag, but I'll show you this. In our tradable instruments, we have two sets of tools that we use. Two sets, okay? And we're just trying to find out something, and I'm going to bring up my instrument right here. Okay, so I'm going to put under here trading tool. Okay, trading tools. To do this, one of them is going to be the sizing spreadsheet. Okay, sizing spreadsheet, spreadsheet. Now, I'm going to bring up the sizing spreadsheet, and we'll bring up right here sizing spreadsheet. Okay, sizing spreadsheet. Okay, let's grab that, and I spelled it wrong. All right, we'll fix that in just a second while this thing updates. I'm going to have to update it on the other screen, or else it'll lock me up here in just a second. Okay, actually the name of it, not because I'm spelling it wrong, is different sized lots. Different sized lots.ods, ODS, or ODT. I think that's Open Office. It's ODS, okay? Or different sized lots Excel. Different sized lots Excel. .xls. Okay. Now, these two files right here are important. They help us pick our tradable instrument. All right. So if we go down under here and you look at AUD Bank, this section updates dynamically. To update this, you bring up your platform. Doesn't matter the platform. You go to Tools. You go to into here where it says Options, and you come onto here. This has to be checked like this, but you go to Server and you enable DDE Link. Okay, and it will dynamically update this. Now, where the data came from is two places. It actually came off of this. This was an open sourced indicator that is not kludgy like the way I programmed it. It's very straightforward and very nice. It does a good job, but I haven't studied it very much. It was somebody else's source code, but they open sourced it. This shows you on the Euro USD, it shows you this is the lowest volatility by time. This is the highest volatility by time. Lowest volatility by time, highest volatility by time. Okay. Now, this becomes really important, but one of the most useful websites that we can get to is going to be www. We're going to need two of them. www.forexticket.com. We're going to need Forex Factory, Forex Ticket. Okay. www.forexticket.com. And then we're going to need one more. I'm Googling them on the other page. One is trading times. It's called Forex trading hours. Okay. Forex trading hours. All right, so let's grab this, Forex trading hours. All right, or Forex market hours. Now, first off, this tells us by our time zone when the bank's open. All right. Now, you want to know because when a bank opens, we expect the volatility to increase, and this is actually provable. We can actually see that this goes up, and there's a formula we use and an indicator that we can use. And the indicator, I'm not going to bring it up right now, but I will address it under trading tools. It's called a dynamic, it's called FAT Tools Dynamic Stochastic. FAT Tools Dynamic Stochastic. And I'll give you the formula for it right now. Okay, it's FAT Tools Dynamic Stochastic, and it's really the close minus support, okay, S1, that's a closed S1, divided by R1 minus S1. This is where we are in the range. This is the first step, where we are in the range. We're in range, okay? We're in range. And we can see if when did range X get bigger? When did the distance get bigger? And we can test that. We can go through, take that indicator, go back through certain amounts of time, and we could say, you know what, when did this really get bigger? All right, we could go through and grab that and look at it. So this will tell us, and you could trust me, that at the open, volatility increases. And I have a summary of that actually that I can grab a little bit later and show you. It's a spreadsheet that shows you the spike in volatility when the well, pause, I'll just grab it. Okay, this is loading up now. What we did with this is we took and time sliced that indicator that I just told you about to just prove a point. Okay, you won't use this anymore, but you'll use a website to essentially trust on this data. Now, it can be programmed in here automatically, but what this does is shows at, come on, okay, this shows according to each pair, and this is all, the bottom scale is London time. Between 5 and 6 a.m. London time, the volatility increases, and this changes on specific pairs. The volatility increases right here when the U.S. opens, and this is when Japan opens. Okay, and it's showing you the changes in volatility of the pair. We know that happens. So what tool do we use to tell when the banks are open? Well, we take this and it tells us, hey, the closer and closer to the bank opener to those times, it tells me that we should pick this symbol, okay, the symbols, because look at our skill we're looking at. Our goal is to pick a symbol. Goal is to pick a pair to trade. Pick a pair. Now, once we pick which banks are opening, we go to our spreadsheet, our original spreadsheet that I started to show you. We're going to close that one, and this is the different size lots in here. Different size lots. We'll pop this up. And what this does is, this is the lowest volatility by hour, and these I just threw in real quick. This is the lowest pips that it moved by hour. Okay, now I didn't conglomerate this data. It came off the pink indicator I brought up. Okay, it's this indicator. It says, well, what's the lowest time? We just went through all these and looked for it. We have that indicator. It's open source. We can convert it. It's a matter of time. This is the lowest one. This is the highest volatility. This is the difference. What we did is we took the spread, which is coming in real time. That's why we linked the two of them together. And we divided the spread by the distance that it travels. The one with the lowest number wins, because this is the lowest cost to movement. So to calculate out how far it's going to move, which pair to pick, so our goal is to pick a pair with the lowest cost. The lowest cost. Cost is the spread. Cost is the spread. Cost to movement. So what we did is we said, well, pick that. We have this built into the spreadsheet. Okay, so different size, these two different size lots here, these allow us to do that. All right. Now, there's some other things that can't predict, and that's where we go back and we use another website. We use this one, Forex Factory. Now, Forex Factory comes in here, and under calendar, you go under calendar, and then you come in here, and I have it filtering just red news events. You can click this filter and you change the events you want. you come up here and you click the time right here, and you set it to, mine set to dealing desk time. That's the time of my dealing desk. Now that's going to be important because this tells me when news is coming out. Now, there's another tool that does this. Okay, so I'm going to bring this up, and we have a tool that we just started using that was found on this website. It was open sourced once again. Okay, and that thing is this. If you bring this on, it's an indicator, and you bring it on, and you set it, and it shows you the upcoming news events. The weekend's over. There's no more upcoming news events. Now, I import that into my newer versions. Okay, so let's grab this, and we take that data, and BlackBourbon, this brings in news from Forex Factory, and Daily FX, www.dailyfx.com. Now, DailyFX has some good news, but we're just hunting volatility. What's our goal in this whole model? Okay, our stop and reverse one, our goal is to hunt volatility. Our goal right here that we need to have is hunting HV. We really need the highest HV. We need to hunt HV. So our goal is to hunting HV. All right. Now we're going to come down in here, and we're going to grab one more website that we need. There's one more in here that's really good. We go in here, and oops, that's an ad. We don't want an ad. We go into Forex Ticket, and this shows us the volatility. This is the daily volatility. We don't want the volatility collapsing. We don't want it collapsing. Oh, look here, the volatility's been climbing. Okay, this is per day of week. You want to get in when the volatility's climbing. This is a terrible one to trade right now because volatility's decreasing. It's flattening out. It's not a good one to trade right now, unless you think that that's the bottom and it's hooking up. You want to see volatility hooking up. So we use this to determine long-term trends in volatility, long-term trends in HV, because we don't want a long-term trend down bad, okay? Trend down is bad. We don't want that, all right? Now, that's how we analyze our tradable instrument. Now, these at the bottom of our spreadsheet, we didn't finish this thought. Here at the bottom of the spreadsheet, I'm trying to find it right here. This is the Australian banking hours, European banking hours, the best one to trade during both European and US banking hours. And they rank them and tell you which pair is the best to trade. So I'm going to put down here, check the tabs. And this, I'm going to move this. This is about our new builds. Keeps getting in the way when I pop it up. Okay, so check the tabs. I'm going to put down here, check tabs. Okay, now this lays out our tradable instrument, how we pick it. Now, our trade identification is really all we want to do is be in between R and S helps within one bar of resistance or support, and we could use any time frame on this, but right now the old one's set to 5, and you can change the time frame on the new one. Okay, so within any time of resistance or support, new one changes time. Okay, changes time. All right, so this is our trade identification. We're within one bar of resistance or support, and we're looking for or within an hour of the open, This is one thing we're looking for, or within a hour of news. Just get ready. Or we are at resting HV. We are at resting HV. Resting HV. This is an hour of the day. These are important. Notice that these all end during hours of the day. Now, our trading tool to control this, we have a trading tool, and it's the EA. The trading tool is the EA, and inside the EA, we have time setting. Inside EA, we have three time settings. Okay, start, stop, override. I guess we have 4. Override, and Friday start and stop. because Friday I wanted different times. Friday, start and stop. Okay. So inside the EA, we control this by starting and stopping times. Really, our trade identification helps around that. And these websites, okay, because these websites we brought in, Forex Factory is a huge help, and so is this one. Okay, so these also land under these trading tools because they'll tell us when volatility is going to pick up. That also helps us pick the pair. Now, we're going to go into a trigger. Okay, our trigger is a cross of R1 or S1. Okay, and the cross is just the high, the cross with high or low, so really high or low. This is one way to write it: cross sub H1 H0, the current bar, H0 comma R1. This means we crossed above, and we don't want that. We want it H0. Okay. And or across, and this means lower. This is just a denotation you may see me use sometimes. This would be S1 comma L0, the current bar that this tells me we crossed. That triggers us in. Now, our targets are much more sophisticated. We tier out. The reason we tier out is losses in a row are low. Losses in a row are low, but yards or pips moved, because we're getting ready for the Super Bowl, are small. And this data can be proven through what's called your D-zone indicator. Okay, we can prove this out through a D-zone indicator. All right, so our targets, we have a trading tool also. Our trading tool are how big is the D-zone? How big is the R D-zone, the resistance D-zone? Okay, we can use this to calculate out stuff. So we have our D-zone section we're trying to work at. We tier out into this. Okay, now when we go to start this, we're going to tier out. We're going to go for 1 ATR and sell part. Now usually I'll sell 50%, but this does not have to be. You could disable this. This is preset. 1 ATR, one range. We're going to define range as an equal distance stop and target, sell 80% left, 80% of what's left, and trail below S1. Okay, now this is all controlled in the EA. So another trading tool is, so we're just going to put D-zone up here. Another trading tool is, I'm going to finish that thought. It didn't get all the way through. How big is the R zone? The R zone, that's what we need to define. Another trading tool that we use up here for trail is, we're going to put in here pivots. It's a pivots. I usually put them on the chart. It's pivots. Okay, you throw them on the chart. Now, if we lose though, we'll put that down in a different section. Let's go to trade size. Our trade size is really, really, really important. First off, there's a balancing act here that's going to take a minute to explain. What you're going to have to do is you come in here and you say, look, how much do I make a day? Well, we don't want to lose more than we make a day in one news event. So medium risk is no more than 5% of your account, or you have risk of ruin. Okay. And what you're going to do in here is you're going to pick medium risk to heavy risk, depending on the news event and how gutsy you are. Okay. This is how the system is set up right now. Okay. Now, it's actually 1 right here. Now I'm going to go to 1.18, 1.18, 1.18, 1, and then this is how it comes pre-configured in the old one. And the old one, when you put it on actual other symbols, it's actually a hard-coded for pips. And I'll explain to you this money management system in just a second. I want to get the numbers right so they came in here right. If I size this to 1% loss, the starting tick size would have to be at 0.08. Okay, now how do I get, this is what you need to input that's really important. Starting tick size, you need to import account size, whether it's a standard or mini account, your wages per month, and your wages per day. Wages per day will be calculated off wages per month, and what the daily ATR is of the euro. Okay, you need to put that in. because you need to look at this information. Now, the distance to stop is calculated once again off of not this. We use a different tool, and you can either use your Fat Tools paid range, and you can pull this on, which is the average distance between support and resistance. And that one, I think I have it colored to a black one. So let's pull this up right here. I'm going to pull this up. It's got a black background on it. I think it's what I have it defaulted to. That's why I didn't draw on, but I'm going to grab pivots right here. I'm going to drop the pivots on. Okay, so here's the pivots. I have those colored differently. Find the lowest average between support and resistance. So if you go, oh, here, look. What is, you find the slowest time of the day, with the pink indicator, which right now is at, you won't be able to see it until I scrunch in. The lowest time of the day is about 4 a.m. So we're going to put this in your notes to find this. All right. So trade size. Our goal is to balance, to balance losses in a row, versus your risk to how much you make per day, Okay. We don't want to lose no more, and make it at first maybe 6 to 8 losses at first, and no more than 1% of account. Okay, 5% at the highest. When you get better, you can go 5% and 5% at one loss when you're bad to the bone. Then you could go, but that's gutsy. Oof, that is so gutsy. I've done it before just because I felt the news event was going to move big time. But you could do that. All right. Now, the trade size, when we come in here and we start to look at this, step one, find lowest HV, time. Step two, average out the distance between R and S at that time of day. Now, regrettably, I have indicators that do this, but they just seem to lock up because they're really, really, really slow. I'm converting the indicators to do this to scripts, so they run once. Converting these indicators to scripts, but I haven't had time because there's a way that it'll calculate it out and give it to you. You got to do it by hand right now because it's just slow. All right. Once you find that, this is, add it, step 3, add in the spread. Step 3. Add in spread. Okay. Step 4. Make sure it does not violate Brownian motion. Okay. Now, this could be too small. This can all be done, but this is stuff that was too slow to do. So I'll explain to you what this means. When you sample this time, okay, and when you sample this, you need 3 things: range, bars between R and S, and you need ATR. Okay, so you need the range between R and S, the bars between R and S, and the ATR at that time of day. Okay, now to get this Brownian motion calculation, to make sure you don't go too small, you take ATR times bars. So we're going to call this on our pay range, because this is where we're going to get paid at, and we're going to call this one our pay days. Okay, now it's the bars between R and S. You take the pay days times the ATR. Okay, this will give us a theoretical move. Okay, a theoretical move. Okay, it just gives us how much we think theoretically it'll move. So it'll kick this out. We're going to abbreviate theoretical move by the numbers TM. Okay, now we're going to take TM and we're going to minus this. This is usually the biggest number from really your pay range. Okay, equals, stop cannot be closer than this. Stop cannot be closer than this. Closer than this plus spread. Plus spread. This gives us Brownian motion plus spread. Okay? Now, you can't have that any closer than that. So, add the spread in. Now, go to spreadsheet. Okay? I'm going to shoot this down to a new screen because I want this on its own. Okay? So, now we're going to add in step 5. Step 5. Okay? Add in, well, I'll give you the cell number. I was thinking the best way to do it. The cell number is really right here. The whole number, B11. Add in B11, the whole number, distance to stop, okay? Now, you have to figure that out. The rest of it's calculated by how many losses in a row. Now, these are changeable. You can go to 6. You could go to 0.05 is 5%. You'll be down 5. Or you could go 0.01 is 1% and 4. That's 4 losses in a row. You'll be down 1%. And this is the size that you would move over here. 0.08, okay? Or if you do 8 losses in a row, okay, it'll be 0.01. If you do 6 losses in a row, it'll be 0.04. If you do 5 losses in a row, you're at 0.08, okay? So we put it in, it puts in 0.08. Now, this is your money management profile. What this does is, Bourbon, I'll bring up a flow chart of it in just a second. But what it does, well, let's grab it right now. I'm going to pause it. Okay, this is how it works. If you break out, it moves up. You know, we buy, okay? If it breaks down below the stop, we stop and reverse. Okay? We stop and reverse that. All right? If it breaks up again, we stop and reverse again because now we're in the downside. It shoots us to here. We broke down. It shot us down to here. It said, okay, look, we got into here. We got in right here on the breakup. You know what? I'll save this. This is better for some. This is really, really good for a programmer. It's not so good for the general populace. But if we got in here, we broke down, we double up, we send back here, and it starts to work that little system. But I'll add that in for you to look at. It's probably not the best for general people to grab that. So we'll continue to just type up some of the stuff that we want. All right. So step 5, we get the distance to stop. Step 6, pick. We're going to put this down. We're going to pick how many losses in a row. Pick losses in a row. Losses in a row. Okay. Now, when you pick the losses in a row, this is the most important thing you're going to have to hit up about this. Okay. You have to keep in touch with a ratio of 1 to 2 things. Right here where it says cumulative loss. Your cumulative loss is $3, then $10, then 28. But when your cumulative, your net profit is 433.37. Well, if your cumulative loss is $70 and you divide 70 by the 320, that's a lot of losses it takes, or a lot of wins it takes to get back to break even. If you take the $7 into there, it's not too bad. That's at 3 losses in a row. The whole object is to avoid these. So your main goal in the system, what you're expected to do, is to avoid a lot of losses in a row. Goal of user is to pick the high HV time, and watch the relationship of losses in a row to losses dollar amount, losses in dollars to win in dollars. Now, there is a whole plethora of research that we have out there that shows over a randomly selected 12 years, it's a huge pool of data, all the trades on it, or it's backed up by trades, randomly tested over 12 years, how many cycles in a row. Well, the most you could respect is like 12 is the maximum we ever found. And the frequency of those is very, very rare that we don't get it, because if you are picking a low HV time to start this, what's the probability of it moving at least that much over time? It's very high. So this is a real balancing act in this as we size it, because you pick the number of losses in a row, but the more losses in a row allows you more time for it to develop. So, but it also greatly reduces your win rate, or excuse me, not your win rate, but your profitability, because the more losses you stretch it out, the smaller you have to go. Okay, so you pick losses in a row and pick size. I'm usually picking 20 pips on the euro. Okay, that's what I'm setting it to. Now you can change that based on those losses in a row. Now the trade management is this. The trade management is really your money management profile. Money management profile. Now what it does is if and you don't have to do this if you're right in front of it. The old one doesn't allow you any option on this. Okay, so the new bourbon, black bourbon, allows you to set through a script all these levels in here. All this stuff is allowed to be changed dynamically, immediately. All of this. Now the point, what these are is percents. This is percent that the target is going to increase. Now I'm putting mine at 20. Let's put it 20. It's going to go up 4 ticks. The old one's locked at 4 ticks. That no matter what pair you do, but the new one does it by a percent. So you increase your stop by a percent. Why would you loosen the stop? Well, we assume you pick the slow time of the day. So we say the variables you can change in the new black bourbon are lots. You can trade lots. You can trade stop. You can trade target. All right. Now, all these are dynamic by winners in a row or losers. They're dynamic by wins in a row or losses. And it's controlled by a script. Okay. So the trading tool to control this, the trading tool is a money management profile. That's what it says. Management profile. Okay, and it's a script just called Fat Tools Money Management Profile, and you can change these dynamically. It doesn't hurt anything. Okay, so it's called a Fat Tool Money Management Profile, and you can put this in. It'll change it dynamically. All these. The other one's locked in at 4 pips. Now, the reason we did that is I don't want to go to the spreadsheet right there. Any programmer wants to look at that. That's the flow of logic through the system. I don't mind if you look at it. It really works like this. If you go to breakout and we didn't quite break out and didn't move as far as we wanted, all right, so you didn't do it. You just didn't move quite as far. And remember, these are cat tools. These are not meant to be left by themselves. It just doesn't run as far as we want. Well, when it drops, we say, well, we don't want to get in and out. So we change or adjust the stop, and we make the stop looser. We actually take on more risk because we loosen the stop up. We said, you know what? Volatility's really, really shrunk. So we've expanded the stop. And there's an input that says, how far do you want to expand this stop? And I'll do a whole other video about inputs. How far do you want to expand the stop, expand the stop, expand the stop? Well, usually we'll expand it 4 pips 4 times, okay? But at the same time, we're going to expand the target, so it makes it harder and harder to hit our target. The closer and closer the target is, the higher the probability that we hit it. But if we're in the wrong time of day, we expand the stops. So the current money management profile works like this. The current one is 1.18, 1.18, 1.18 4 times to the 4th level. And so the first level is just 1. A level is how many losses in a row. The second one, for the stops, we expand the stops. Now what I do if it goes beyond this is me. It's not set to it. Okay, this is my personal one. It won't do this automatically. All right, this is how I deal with it. I'm going to shrink the stop, and sometimes this can be a drag because it takes too long. 1.18, and then we're going to come down here and we're going to go to 1, and here I start to tighten the stop, but I don't tighten it past the Brownian motion number. And that it doesn't give you a Brownian motion in here, but you're going to have to look at a number in this. Okay, this number is going to be, it's not popping up, it's behind me. Let's see if it'll come up here. Okay, it's right here. This is showing you can tighten the stop now. This is how I do it sometimes. 0.88, 0.88, 0.88, 0.88. Well, all of a sudden that tightened it up to 20 pips. That's fine. That's my original thing. But if I get too close, I can't do that. These columns are really, really important because this says you need 42% of the range to break even. You want to try as hard as you can to keep those around 42. If you can, keep these as low as possible. You have a high probability of winning, because we have some fail safes in here. I'll talk about in just a second. Not fail safes, but ways to do this. 1, 2, okay, and 2, and 2. It keeps raising the lots. So this is the way it's set up right now. The system, it keeps the current one. That's how it's set up inside there. This is not inside the current one. The new one, all this can be changed. All of it can be changed on the fly. Okay, so the current one's set up on this, and the expansion isn't a percent. It's actually 4 pips. It's actually 4 pips. Okay, so the expansion isn't a percent. The other one, the newest one, is, and that just came out of testing this week, so that we could change that on the fly and see what's happening. So one of the things that we have, a setting or a tool, another tool we have in here is the EA. Okay, so the EA itself will go for after X amount of losses in a row, X amount of losses in a row, go for break even. Go for break even. Well, cool, because we're trying to avoid lots of losses in a row. Now, the reason this is important is if you get into here, as long as these stay low in your money management profile, and just one simple trick even early on will dramatically change this. Like, watch this. I'll do this sometimes. If I really think it's going to go that way, I'll do that by hand. What that does is look how this passes back through, right through here. Right here, I couldn't get out at break even. I'd be down $3, but the $3 compared to the $1.60, that's only a couple trades that I need to make back to make it. But look how it dropped the next level. I have a higher and higher probability of breaking even. So we need to keep that as low as possible. Okay. Now, sometimes I'll even tighten the stop on that. So I'm trying, your goal in here is to try to keep, is to not lose big. Okay. Recover from loss. And number 2 is keep break even percents wide. Okay, or tight. Let's say tight, close to entry. Below 50% is nice. Below 50% is really cool if you can do it, but it's really difficult to do that. Okay, that's your trade management on this. Now, there are some trading fundamentals. Okay. You want to go with, you can help this by, you can expect it to go with the swap. So goal is to, I hope go with the swap. Because this is the only fundamental you really know, is that, hey, high swap rates, it should be biased to one direction if it's breaking out in that one direction. Another thing you could do is, there's trading technicals. You could make sure that you're going with a pattern technical. Now you can go with pattern. Now the newest ones have a feature in here that allow you to do this. You attach them to the chart, and this more deals with a workflow document, but there's a script that says it'll say activate BlackBourbon. You pull it on and it automatically activates it. So for both of these, to go with the swap and go with this, we have a trading tool, and it says start EA install mode. Okay, start with script. Okay, and we also have a close all with script. Okay, and this stops it from trading. This is our trading tool we use to do this. All right. All right, so we start all these with a script. These are the same trading tools we put in here. They're applied down here, because you can take some fundamentals where you can go with the pattern, but you change the new ones, have this feature on it. I'll be back in 1 second. You'll hear a little break. Now, this model, it lulls you to sleep. It's the trading psychology. There's a couple problems. You get scared of a break. Most people do not like breaks. Most people dislike breaks, dislike breakouts. It makes them feel uncomfortable. You'll get over that real quick when you run this, okay? This is a true statement. They just don't care for it. let's go take this back to New Times Roman. Let's grab this right here. Okay, most people don't like breakouts. Makes them uncomfortable, makes them just uncomfortable, makes them feel funny. Now, there's a couple things that you have to get over, makes them feel funny. Most people need to make X in a session. A session is defined as when you hit a trade, you know, it's really hours worked over your hours return or your wins. They get uncomfortable with that, and that causes them problems with sizing. And so we've addressed that. This is where the fix for this is cat tools. It'll do it for you. There's no pause, and this is one of the biggest advantages of this. It fixes these two psychological problems. There's no pause. It's instant. So you don't really have a chance to do anything about it. Now, the time of day is super important in this. Super important. Okay, it's super important. Okay, we got to be right on this, because if you don't have the right time of day, the model isn't going to work right. It's not going to. It's designed for a specific time of day. And there's a tool we work on this, trading tool, and it's that that one that one of my buddies found. Can't think of his name right now, for it's just eluding me. He likes Vegas a lot. Let's see. Anyways, your trading tools is going to be the HV one, and we're going to look for upslopes in HV. Upslope in HV, okay. Downslope bad. Downslope bad. Okay, we don't want a crush in volatility. Okay, that'll cause us problems. All right, we just can't do that. It's super important. Okay, super. Okay, let's leave that one right there. The trend direction, we already have it set. We are going with the flow. We're going with the flow of the market, and we don't care. In this model, we don't care. Do not care, because we're going with it for the most part. You can use your stall and stop scripts to trade it. You can do that. Now, this is where the next section we have to put in is workflow documents. And I'm going to make a whole section on the differences. You're going to get a video on the workflow documents, and a whole section on on new and old versions. Okay, so this is the math really behind it. There's not much math. There is a couple notable changes here where we say your target right here is 1 ATR, min 10 pips, okay? This down here where our trade management, there is a section here, if loss, then the targets change. So the target changes. Okay, how does it change? It goes like this. Okay, if loss, target changes. Let's put this clear up here. If loss, target changes. Now, it's really going to go like this. It's pretty simple. It goes range, ATR, still sells the same amounts and everything, and then trail. Okay, it'll still do that. Range, ATR, and trail. It just switches the order. Now, there'll be a demo too. So we're going to make a workflow document vid. This is what's coming. Video. Okay. We're going to have differences between old and new, and we'll have how to make it work. And then we're going to have one on high cycle trading. This is different. We're going to have to work on that. Okay. So for the most part, you just turn this on and it rips around news events. Now, there is something I would like to make note of right here before we go. Money and goals. Okay. I want to make 10K, 10,000. Okay. I know that the model all by itself will make 62% win rates, and that's provable over thousands of trade. It'll on a 24-hour basis, on 24 hours. So what I'm going to do is there's a way you can equate this. You can figure out there is about 80 major red news events a month. Red news events a month. So our goal is really to configure to these news events. Well, even if you take 10,000 and let's say you hit all of them, you take 10,000 and you divide it by, well, first we got to do this. We take the 80 major events, 80, and we're going to times it by the 62% win rate, because those are the only ones we're going to win on. And really our net wins are going to come out to only about, it's a little bit less. We're going to win on about 18% to get our goal. On that, because we got to recover our losses, but our whole trick is to stop those losses. When I run this, my win rates when you intervene by hand are much higher when you get some experience. You can ask the Google group. You wouldn't even believe me if I told you, so you'll have to watch it. So we take 62 and we times it by, let's take it by 20% winners that we've netted out in this. So that means that we'd have 12 good news events. So if I take 10,000, divide it by 12 trades, 10,000 divided by 12 trades, it's going to put us into about 833 needed per trade. That's to make 10,000 right away. So you have to figure out this win rate. So money and goals, we need to get your win rate, and you can look at this model at www.mt4i.com/users/BlackBourbon V1. Okay, so I'll make some more videos about this. All right, thanks. Okay, this is an overview of the old and new models. I'm going to cut this part out of the top here. This is a little overview. There is, these are the ones being released this week. They're Red T, it's a trend following system. Red V, it's an Elliott wave. You buy a break, it fades. You sell that, you buy a retracement, you buy a break, and then you trade the bank close. I'm going to release Betty and Bourbon on the new system. Well, what is the new system? Well, one more thing. Midweek, I'll release Little Johnny and the Mule. But the differences of these are air traps in the old system. Okay, in the new system, if the account has drawn down too much, we reset the account value. All right. If this is a fail-safe, it's better handled by brokers, because if the system re-inits, it redraws the account value out. Unless I was to wait for time between that. But it does. It says if you've drawn down too much, prevent that. There's an air trap for no global variables. Global variables are how we store offline the money management system. There's an air trap for critical global variables. It will try to reload it. Both of these do. It says it sets a fail variable, and then it says delete all the variables and reload off hard drive. Okay. If we delete all those, it'll reload them off the hard drive. Okay. There's an air trap for the size too big. You can set the maximum size. There's an air trap for combined size between all EAs. There's an air trap for margin. There's an air trap for too many trades in a row. There's an air trap that kills the processes. And what are the kill processes? These are errors that come from your broker. Okay, these are errors that come from your broker. Common error. What's that? I have no idea. Invalid trade parameter. Everything in yellow could have came from me. The rest come from the broker. Old version. Well, if it's an old version, there's nothing I can do about it. We kill the system from working just on the CA. No connection to trade service. We kill it. Not enough rights. We kill it. Too frequent of requests. That could be my problem. I'm sending too many trades, but we kill it. Account disabled. That's from the broker. We kill it. Invalid accounts. We kill it. Invalid stops. That could be from your trade volume. We kill it. Market closed. We kill it. Trade disabled. We kill it. Not enough money. We kill it. Long positions only allowed. That's from the broker. You can't hedge. Too many requests in a row. We kill it. Trade modified or denied. We kill it. Trade expiration denied. This is some brokers won't let you put an expiration date on the trade, and I can't put it on there. Okay, that's for buy stops. Trading too many orders in a row. The IBFX is 800 orders open, so that's a lot. But trade hedge prohibited. DLL calls not allowed. That's from you guys. That's from you. That's a configuration error on the user's end. Cannot load libraries. That's usually a user one. Cannot call function. That could be me. External calls not allowed. That's a user error. Global variables not found. We have traps for that, so we shouldn't get those errors. But we'll kill it if it comes up to time to trade and it's not there. History will not update. We kill it. A trading error, we kill it. No error or order selected, we kill it. Unknown symbol, we kill it. What's kill mean? It means it can't run. It can't run. These are called stalling errors. These are errors where we just say we need to wait for something. A stalling error works like this. We don't know what the error is. The bank doesn't tell us. There's no result. And this is reported to you in an email. Just like this. It says error, no result. I don't know what it is. This is what comes back from IBFX. Error server busy, trade malfunction. We just wait. Trade timeout. We'll wait. We'll try 5 times. After the 5th time, we block trading. Quotes off. We stop trading. So this is the whole list. Broker busy. We don't stop. We stall. We just wait. We keep retrying every so many seconds. I think it's 1,000. 1 second. It waits and then retries. It gives you a requote, a trade timeout, price changed. Any of these things, it stalls the system. Now, up here, what we do is we come into here and we say, well, this is an input. If you stall it and you say how many minutes between a trade that got an error, and it actually reports back. In the trading loop, it'll try for 5 times. If it fails, it'll get it. But if we get an error that comes out of there, it's how long it'll stall. No error on good trades. Well, how long do you want to wait between trades? This is so it doesn't place a good trade repetitively. Like, oh, you bought. You didn't mean to. So that's the number of minutes between trade. Changes. If you change a chart, there's no problem. This is a new setup. Normally, when you put these on and you change a chart, all of a sudden the EA works on the new chart. The new ones don't do that. They're locked to a chart. There's some features in here, new features that we have on the new ones. You have a money management on the fly. This is a script you can pull on. It resets your money management profile. You could close all install. Close all trades stops the EA and from opening new ones. You can restart the EA. Stops the EA cold. This stalls it. And you can reset the profile. This says reset your profile. Now, this is important because the next section in here is a plethora of files. These files are found in these locations, okay? It should be under, I missed one in here. I need to change this. These files are how we store the money management system, and they're really important. And when you reset this, it kills the old files. It deletes them. It needs to delete the old files, and it'll totally erase it. And it's up to the user to do this because the files will constantly grow on the hard drive. And what are these files? This becomes really, really, really important, and it's one of the major differences between them. When you go to backtest, you take these files that are right in here, okay? You're going to take these files that are right here, and you're going to move these, all right, when you go to backtest. So the old one you type in information about, okay? So we're going to come into here, and I'm going to bring this up. I'm going to bring this up where it says, well, I'm going to wait till it pops up. Come on, computer. If you look at this down here, there's experts right here. It says experts where the thing is. It goes expert files. That's where all the configurations files. If you decide to trade a backtest, you need to move those files to tester. So this one should really be tester and then files. Tester. You're going to move them. Okay. Now, your files on the hard drive are reload and backtesting. Well, it'll give you your EA name, your symbol, your time frame, extern. That's the name of the file. This is a backup of how you set up your system. This one's a backup of how you did your system too. This is the same thing. So that's in there twice. That's redundant. Okay, we have a backup of your money management profile. One of those should have been money management profile. Let's change this. It's not a backup right there. Oops. Let's grab this and move it up. So you have on your hard drive, let me show you these files, and this will make it a little bit clearer. Okay. I'm going to come back in here and hopefully it brought them up. We're going to go to experts right here, and then we're going to go into files. And every time you configure your system, these files are appended unless you've reset them. Okay. So we're going to go into files right now, and we're going to look at under these files. Okay. Now, one of the things in here, it says the name of the EA, the symbol, and how you configured it. The information in these is really important, so don't delete them. It tells us how we configured them, and this is what each one of these does. Now, you have to move them over to the backup one so that you can reload it, because this is some new stuff that we haven't had and been able to do. It copies and stores how we configured our system. Okay, this is the money management profile. We do have an original one that it's I think it says original, and this is for your oh, it doesn't say original. There's your money management profile right there. Okay, set your money management profile up. Anyways, these are all the files. There's one I was looking for, original orders. This is one that we haven't implemented, but it'll be used in hedging. But all these files are set up on your hard drive. And this is what we cover on Friday or Saturday nights to do programming, is how these are structured. The disadvantage of using this, there's no back testing. Answering questions is a pain to restart your profile. The long-term goal is to put them into Qt, make it easy to review. We haven't done that. We've got an application that we've designed that's not finished on this, but we hope we have one pretty quick set up. And what it does is, instead of inputting the questions by just asking you a question as a user, and I'll show you how that works in just a second. So this is more of a development schedule. This is the notes from our development class tonight. If you take, let's pop this up. Come on. Let's grab it. I'm going to grab this. These files, what they have in them, they're common delimited files, and they tell us how you configured the system. They should be portable, okay? It doesn't let us optimize in back testing when we do it, but I want to pull this up and show you how it's meant to work. I'm just going to go to File. I'm going to open a recent document. We're going to pull this up. Oh, not that one. We want to pull up the whole project. And I think it's Pro in here. This is a program called Qt, and it operates independent. It's independent of MetaTrader. Okay. Now, eventually, this will allow us web-based configurations of our EAs. You could be away, and all you need is an HTML screen, and you could log into a website and configure your EA. This is one of the things that we're working towards. All right, to set this up, but eventually we hope to have this set up in here where, and I'll give you an example of it. Okay, so for Bourbon, this would be the EA, this would be its starting time, this would be the news time, this is Betty, and this is how it would be configured. And you could read this in and change any parameter at one time. That's not done, but this is part of our development goals. We have systems. We have grid systems, variant systems, stop break, scalpers. And we're going to start letting users request development of systems after 60 days, okay, from now. But this is an overview. Oops, let's grab this back up. This is an overview of the differences between the systems. Now, there is one other major difference. I think I want to put this right here. This other major difference we'll put right here. It's called a magic number. The magic numbers controls how the system works. We set them up like this. The magic numbers are unique to EA. EA is one set of numbers, so the numbers are like this. This is the number. The magic number can be like this. First group of three is the EA type. First group is EA. Okay. Then we could come in here and we could say below this, instead of here, the second group of three. So let's put the second group in. This would be symbol. So we can denote symbol. This is the second group of three numbers. And then the last group is type of trade. Okay. This is how we denote the differences between EAs. This was a major change. it's a major change. So let's save this. This is a real short one. This is just the overview of our notes. It's really quick. Okay. Let's stop this.